Your investing strategy is the most important thing to have as a new investor, and that is because it is going to tell you what to buy, and when to sell. But as a new investor, there are dozens of investing strategies out there. Thankfully, today I'm going to cover the top 5 investing strategies for new investors, and I'm going to tell you the one that's made me the most money. So let's go ahead and jump right into it. I'll start with the easiest one. This is buy and hold. You buy it, you hold it. End of story. That's really it for the first one, and this was perhaps most famous by Warren Buffett, but also several others. And the reason why this works is because the stock market goes up way more often than it goes down. Also, the odds of you making money after 5 years is above 90%, going all the way back to 1950. You buy something, you hold it. On average, you're going to make money the longer that you hold it. I mean, there's really not much to it after that. Now, the issue here, and the thing that makes this a little bit more complex, is what do you buy? That's the difference here. What do you research? What do you buy? And then once you buy it, you're just really holding on to it for the long term. Some of my stocks I've held for the longest: O'Reilly's, Apple, Microsoft. Those are some of the ones I've had for well over 5 years at this point. But that's what you do. And once you're up by that much, it is difficult to lose, but not impossible. But buy and hold, one of the most effective strategies out there. The next one here is index funds. You can buy and hold index funds. And that's something I should have mentioned earlier. You can stack these together. An index fund, for those that don't know, index funds own an entire segment of the stock market. The way that I like to describe it is putting it in a sports metaphor. I'm a Laker fan. I think it's the best NBA team in the world. However, the Lakers could be trash this year. Hopefully not. Hopefully not, but they could be. And here's the issue. Just like I could choose an individual stock, I could choose Apple. Well, what if Apple doesn't make any money? If that's all my money, I'm in trouble, right? If that stock is down. So instead of doing that, I can own the entire NBA. It doesn't matter who's going to win the championship. I'm going to own every team, or at least a slice of every team. And that is how you should look at index funds, because index funds can own an entire slice of the stock market as a whole. I can own a U.S. stock market index fund. Every stock in the U.S. is going to be inside that fund. Or I could niche down and say, I just want all the tech stocks. I want all of the oil stocks. Whatever it is, there's an index fund out there for you, and it's going to spread out your risk. And if you buy and hold it, you can also make a significant amount of money as well. So again, you can start to stack these together as a new investor. Here's the one, though, that has made me the most money. It's called index plus a few. And what is the few here in this case? A few means that I am buying index funds, but I'm also buying and holding a few individual stocks. So what I do is I hold, I would say, close to 80% of all of my money inside in the stock market for me is in index funds. But that little extra piece is invested in stocks like PACCAR. We talked about that the other day. I own a little bit of Apple, own a little bit of O'Reilly's, and a bunch of stocks in between, by limiting myself to about 20% of my overall portfolio in case I am wrong. Now, there are benefits and drawbacks here. The benefit is, if the stocks that I choose are doing well over what the stock market is, I can do better than what the stock market is paying. So for example, stock market is going to get you, let's say, 7 to 10% per year, okay? Well, if I do that, because I have index funds plus, a stock that does 30 or 40%, well, my average is going to go up just a bit more, and I can get to my wealth goal a lot faster. Now, that's an if, okay? There is a risk here. Remember that risk versus reward is a balance that you have to strike, because you could choose stocks that aren't good, and that can hold you back. So you definitely want to be careful, but there's the one that has been most successful for me. So that's the one that's made me the most money. The next one here on my list is dollar cost averaging. Now, we've talked about this a lot. I think we really maxed out back in 2021 talking about dollar cost averaging. For those who found me on Public, which is one of my favorite investing apps, if you're not on it, there's a link down in the description below. But I was quote unquote famous on Public for investing every single Friday, which was DCA Friday, dollar cost averaging Friday. Today, they have an automated portion that just takes care of it for me, and that actually happens on Monday, which is why you don't see me post about it. However, dollar cost averaging is the practice of putting in the exact same amount on a regular basis. It could be weekly, it could be $100 a week, it could be $400 a month, it could be on the 1st and 15th, it doesn't matter. But the advantage here is, one, you are consistently adding to your account. Okay, that's number one. But number two is, when the market is low, everybody says buy low, sell high, you are automatically buying low, and then you are buying less, but you are buying when the market is higher as well. Because here's the thing, in 2022, I don't know if I could have told you the stock market was going to be down like 20%. Don't know if I had that on the crystal ball. not something I would have thought of. However, because I was dollar cost averaging, guess who picked up Nvidia for very cheap, right? Guess who picked up a whole bunch of stocks for very cheap that are doing extremely well right now? The only way that I did that was because I dollar cost average. I didn't have a way to perfectly time whether 2022 was at the bottom of the market. I don't know if today is the top of the market or where the market is going to go in the future. However, I do know I'm gonna get a piece today, and the reason why this works is, again, because if I'm buying every day now and the market is up in the future, which we've already established from our buy and hold strategy, then what I'm buying in 2023 is going to be worth more in 2025. And what I buy in 2025 should be worth more in 2030. And you see how this cycle continues. So dollar cost averaging is something you already do if you're investing in your 401k, but something you should be doing inside of your other apps if you're not already. I've already showed you guys how to do it on Cash App. If you guys want me to do one on Public, I can do a video on that one as well. But dollar cost averaging, one of the most effective investing strategies out there. And again, you can stack these together. The next one I have here is our last one, and that is dividend investing. Dividend investing can be extremely powerful, extremely alluring because it is the thought of passive income. You can do this by investing in, remember stacking here, dividend index funds, or you can choose individual dividend stocks. I've done several dividend stock videos. We also talked about REITs, real estate investment trusts, that pay out great dividends, and that is a way where you can invest in something, and every quarter or so, which means every 3 months, they're going to send you a check, or you get an email that says, hey, you got paid X amount of dividends. For example, I think it was Danaher. The stock symbol was DHR, as a company I used to own. I realized I got an email that said I got $100 in dividends for last quarter. I was like, oh, didn't know that, wasn't expecting that, but I got an extra $100 that I can then invest more into the stock market, or I can take out and buy some tacos, whatever it is I feel like doing. But that's the point. You get to invest in something that hopefully continues to grow in value, but also pays you, and you can recycle that money. Take that money, put it right back into the stock, grow more, get more dividends, and it starts to cycle around, which can make you a whole lot of money. However, there are some downsides to dividend investing tactics that you should be aware of. I've covered all of that in this video right here.